we are talking numbers. 20% is the number we want to watch tonight as we talk numbers. Here is why. The dollar has risen nearly 20% since last December. We're going to take a look at some of these charts here in a moment. Because of that 20% move, my next guest says the dollar run may be over. You want to get out of the dollar. 20% also marks the beginning of a bear market. And right now, we are down 10% from the April peak on the S&P 500. For investors, numbers mean strategy. Let's get into it right now with Bob Prechter. He is the president of Elliott Wave International. And Bob, is it always a pleasure to have you on the program. Thanks very much for joining us.
Likewise.
So
Likewise.
You say the dollar run is over. Why? What's behind that move?
Well, the dollar move was just fantastic, and we were bullish for the whole thing back when people thought inflation was going to rage. The euro's been killed. Now, you remember the story back late last year. Everyone said inflation is going to take over, the dollar's going to collapse. The euro is the thing to own. Well, now everybody knows why the euro is not the thing to own. These market turns always have a terrific story, fundamental story behind them, and they fool people into doing the wrong thing. But the reason that we think the dollar's ready for a correction, the euro's ready for a bounce, is that not only do we have quite a few bullish people among traders for the first time throughout this whole period, but I think we've completed also a pretty clear five-wave structure under our Elliott Wave model. Those two things tell us it's time for a respite in the dollar, possibly a recovery in the euro. But if I were going to pick a stock or a currency to speculate on, I'd rather be in the Swiss franc than the euro.
Okay, Swiss franc rather than the euro. Let me ask you this. Will the euro's rally that perhaps, or this bounce that you're looking for, will that get diverted if we see a leg down in the European debt crisis?
Well, I think what this is suggesting is there's probably going to be a bit of a respite, or at least Europe won't look as bad as somewhere else for a while. So it went from 150 down to 120. I think it could bounce to 130 without much trouble. Certainly it needs some kind of relief. There are too many people that have piled on the other side.
Let me move on here, Bob. A 20% loss in the major index is also the number that signifies a bear market. A bear market inevitable at this point? We're 10% down from the peak on the S&P 500. Are you looking for equities to continue lower or higher?
I think the bear market that began or resumed, I should say, in April is still in force. I spent quite a bit of time between December and April doing media. I think you and I talked in New York back then, and I spent this time saying, look, it's a great opportunity to get out of the stock market if you're still in it. Since then, in fact, only in the month of May, the S&P retraced all of that action from last December. The market could certainly bounce for a while. I don't think it's really prudent right now to get into short-term stuff. As long as people got out of the market and they're in cash, I think my job is to look for the next bottom. I certainly don't see any indication of a major low yet, so we're waiting for that one.
Real quick, what would be the indication of a low and a bottom?
We need to see some pessimism. We need to see the market way further oversold. And maybe we need to get to the point where there's only 20% of incumbents left in office. All
right, so real capitulation. Bob, great to talk with you. Thanks so much.
All right, take care.
Come back soon to New York and sit with me here at the studio. We'll see you soon. Bob Prechter is president of Elliott Wave International.